To what do you ascribe the weakness that we have seen in tech this year? And to what do you think will it take to turn said weakness around, if anything?
Sure, I think it comes down to two things. I think the first one is a very simple one, which is I think that a high PE multiple stocks just got crushed, as algorithmic and momentum-based traders, hammer those names on the downside. And then the more sophisticated reason is because I don't think that people fully can discern exactly where revenue growth will land after we anniversary all of the COVID bumps that we saw for these tech companies. Because like you saw with Netflix, for example, you saw this dramatic pull forward in demand, but then much slower growth this past quarter. So where do things land on a normalized basis? Our position is that everything will revert back to the trend line, back where we were before pre-COVID. But I think a lot of investors perhaps are thinking that the slower growth that we're seeing as of late may be the new normal.
And we like to look at day-to-day moves on CNBC, and some people criticize us for it, and I get that. And that's fair. That's actually a very fair point, because if we pull back and we look at 5 years, and I don't want to say 5 years is long-term, but I guess these days, James, it's considered, I'm a long-term investor, been in the market for 2 years. The NASDAQ has more than doubled in 5 years. I mean, if you just bought the triple Qs and let it ride, you've made a boatload of money. I mean, a pullback should not only be expected, in my view, I've been doing this 26 years, it should be welcomed.
Yeah, I think 15, 20% drawdowns are not out of the question, especially in midterm years. You do see more elevated drawdowns, but I think the challenge now is the speed of the drawdowns and how strong they are. I mean, what we saw, what would happen over the course of a period of many months happens now over a period of 6 weeks. So it's very, very difficult to position portfolios for that when it's happening in the blink of an eye. But we think, and I'm positively and optimistically speaking, that we are near a bottom here because of the fact that the drawdowns that we've seen in some of the highest quality names out there, 40, 50, 60% in a matter of weeks, we think is rightly oversold. And we're fundamental bottom-up investors, but one of the technicals we look at is the NASDAQ to its 200-day moving average. And that is only a few percentage off of where it was, that ratio from where it was at the COVID bottom. So, we think that there's an opportunity here for 2022 to actually be a good year, because these tech earnings and their sales prowess will move forward independent of what happens with rates and the economy and the Treasury's balance sheet, the Fed's balance sheet.